In the recent mid-quarter market update, Fundrise team are finally sounding the alarm about the possible downturn that we may be seeing with our investment. How bad will the crash be? Is our Fundrise investment portfolio going to take a 25% hit? And will Fundrise team be able to minimize our exposure to the crash? Coming up. If you're new to the channel, my name is Trey and I have over $545,000 invested in stocks, crypto, and real estate. If you enjoyed this video, please don't forget to click that like and subscribe button, as well as check out my investing playlist down in the description below. Now, let's get started. I want to start off by saying that Fundrise team does not do these mid-quarter market updates very often. In fact, in the 2 years that I've been invested with Fundrise, this is the first time I'm seeing this. This leads me to believe that the team have noticed something very serious brewing, and they are attempting to prepare us, the investors, ahead of the second quarter results for some possible downsides to our portfolios. That way, when we see losses instead of gains in late June, when the results come out, we will not be taken by surprise. So this is the article they released recently, and there are some alarming statements, possibly foreshadowing a not so bright future. Let's get to the article. I'm just gonna scroll down a little bit. Mid-quarter market update. I'm gonna click on read more. This is the article right here. The most notable quotes from this article are, and I quote, "increasing level of uncertainty, inflation to be greater in magnitude and more persistent. Things are likely to get worse. Inflation turned out not to be transitory," what a shocker, "and we expect asset prices to either moderate or come down over the next several months." Now, let me quickly summarize this article and explain why we should feel uneasy, at least until the end of 2022. In the very start, Fundrise explains the concept called scenario planning. In short, scenario planning is when Fundrise team go over possible events that may occur in the market and possible solutions and the plan of action for each scenario, if it occurs. The three scenarios they attempt to simulate is, the first one is when more of the same continues to happen. Second is when things get worse. And three, when something unexpected happens, aka a black swan event, kind of like when COVID-19 hit in 2020. Well, after evaluating current market environment, Fundrise team has determined that things will likely get worse from here on for the rest of 2022. The reason why things are likely to get worse for the economy and the markets, Fundrise states three reasons. The first one is well known to everyone, and everyone is probably just tired of hearing about it, is inflation, which of course our friendly waste of time government officials claimed to be transitory. First, they print trillions of dollars in a matter of months and then act like all of this printing will go away magically. If you believed these bureaucrats, then well, lesson learned, never believe what they say, because inflation and prices in general are through the roof, while the salaries of hardworking people remained generally unchanged for the past 18 months. I mean, recent polls literally show that 2/3 of Americans now at this point are living paycheck to paycheck, as opposed to 1/3 prior to COVID. And this is due to price increases. Since when does the government think they could tell us that if you print more money, everything else will stay the same? It's like saying you have a certain amount of gold. If out of nowhere someone found a planet that is fully out of gold, right? Out of nowhere, the price, the value of gold will go down because there's more of it. It's the same thing with dollars. Dollars are valued because of how many of them there are out there. If there's less dollars, they're more valuable because they're harder to get. Anyway, let's move on to the second reason. The second reason is that supply chain issues are still persistent. As many of you know, China has been shutting down cities left and right recently due to their zero COVID policy. Here we go again, boys. COVID cases are increasing again all over the world. There's shortages of microchips, which are used in many electronics as well as cars. One supply chain disruption leads to another, and so on. Cost of construction materials have skyrocketed as well. I believe that things will again get worse in the United States towards the fall and the winter, when people are more likely to get sick, to get flus, to get cold. And of course, new strains magically emerge during the holiday season. So I don't know, the COVID cases are probably going to start to rise again, and new strains are detected, and hey, listen, this is going to be a third time around. Meanwhile, the officials, at least where I live, have said, hey, this is the last COVID briefing ever. Well, guess what? These guys are probably going to be back in the winter saying, hey guys, let's put on the masks, let's get like our 50th booster, which, you know, I'm not going to talk about if they work or not, but it is what it is, right? It's just going to go full circle again in the winter. It's shameless. The third reason that Fundrise states is the sudden Russian invasion of Ukraine. Now, that is a black swan. We literally had 2 black swan events in a 3-year period in the world. It's not looking good, boys. Wars always make markets very, very risky. This war has caused shortages of many wheat-based products. Like, I can't find milk and yogurt in my store. And it says there's shortages. Who would have known that we get so much things from the Eastern Europe, right? And of course, the gas prices have skyrocketed. Now, let's go fill up my car for $5.50 a gas. Like, what is going on? Russia was also one of the largest exporters of construction materials. Many metals come from there. And these materials are used for real estate, which may cause a ripple effect that spreads over to public real estate markets as well as private real estate markets like Fundrise. So let's do a quick summary. Inflation, supply chain issues, and Russian invasion of Ukraine are the reasons that are causing and will continue to cause high levels of uncertainty in the markets. They're now starting to affect real estate as well. Fundrise states, and I quote, "At this point, the question in our mind is not if things will get worse, but instead how much worse and how quickly." Now, that is a frightening statement indeed. So, how's our friendly government trying to combat inflation that is at the highest year-over-year rate it's been in 40 years? Well, the Fed has started increasing interest rates because that's what they always do. When the interest rate goes up, the economic growth goes down because it becomes expensive to borrow money. When the economic growth stalls, the markets crash. And if the crash is severe enough, then the economy will enter a recession. So far, the Fed has raised the rates to just 1%. And as many of you know, the stock market is down over 25% in 2022, and the crypto market is down over 50%. That is with just 1% increase. But remember, the Fed wants the rates increased to 2 to 3% by 2023. So you could imagine the effect it would have on the markets when that happens. In fact, the Fed has never successfully brought inflation down by more than 2% without causing a recession. My opinion is that we will see the rates for mortgage loans hit double digits before things start to cool off. And I hope it doesn't happen, but I think that it is inevitable. However, we're forgetting one very important thing that is gonna happen in June. In June 2022, the Fed will start shrinking their $9 trillion balance sheet. Another name for this is quantitative tightening, which is a complete opposite of quantitative easing, aka money printing, which we had during COVID. That means they will start selling their assets, which include stocks and bonds and likely other investment vehicles as well. Think of it as money burning instead of money printing. This may cause persistent downward pressure on the markets of all sorts because out of nowhere you're selling your assets and turning them into cash. The combination of interest rate hikes as well as shrinkage of the balance sheet will likely cause markets to go down even further in 2022 and may cause a recession. Now, hopefully they can balance it not have a complete stock market economic crash and reducing the inflation, but it has never been done before. And history tends to repeat itself more often than not. So how does this relate to the housing market, and most importantly, Fundrise? Well, increasing interest rates by the Fed cause mortgage loan rates to go up as well, which in turn usually causes the prices of houses to decrease, as people will be less inclined to take out a mortgage with a high interest rate because they have to pay more money, right? But that hasn't happened yet. Interest rates went up for these loans, but the prices of houses either remain the same or very little bit declined, very, very little. However, there are a few projections that say that we'll see a decline in home prices in the third and fourth quarter of 2022, but we will see, because the demand is staying high. No one wants to live in cities anymore. If that happens, our returns as Fundrise investors will decrease in terms of appreciation, right? Because the price of an actual houses will go down, right? But because Fundrise also acts as a lender, and if they're lending out money at higher interest rates, we will see an increase in return in that area, which is usually in terms of dividends. So hopefully this balances each other out. The decline in appreciation returns, increase in dividend returns, and we will be able to get our solid 8 to 12% yearly return over time. I really hope so. I believe the Fundrise team is strong. They navigated the COVID-19 crash very, very well. I believe they can navigate, this crash, if there is a crash, as well. In conclusion, due to the volatility in markets, it is hard to say what the future holds. But Fundrise team has proven themselves to be very resilient to the downturns in the economy. Just look at the Fundrise performance in 2020 during the pandemic. Fundrise takes a very conservative stance on investing and doesn't over leverage themselves, which is oftentimes the cause of the company's collapse. In turn, Fundrise says that they will be on the sidelines, patient with cash in hand in the short term, waiting to capitalize on the market downturn. Smart move, Ben. I will leave you with this, guys. A quote from the Fundrise team, and I quote, "The increased regulation around real estate lending and decimation of the home building industry that has led to the lower leverage and chronic undersupply that puts real estate, and more specifically our Fundrise portfolio, in such a strong position." I love that confidence. I love that confidence. They're saying they're ready. It's not as risky as it sounds. They're ready. Hey, they're going to pounce on the dip and going to get us our returns. Guys, thank you so much for watching. If you enjoyed the video, please click that like and subscribe button. I would greatly appreciate it. Check out my entire Fundrise playlist down in the description below. It has everything and anything you need to know before, during, and after investing with Fundrise. There's over 35 videos. And check out my other investment playlist linked in the description below. I want to ask you a question. What is your opinion about people talking about a house market crash? We know that the stock market crashed, crypto market crashed. Do you think the same thing will happen with the housing market, or will the housing market be very, very resilient and maybe there's a little bit of a correction but never a crash? Let me know what you think. I want to know your opinion and the reasoning behind it, guys. Thank you so much for watching, and I'll see you in the next video. Take care. Peace.